In the world's largest and fastest-growing regions, two Asian giants, India and China, are charting starkly different economic paths. For decades, both countries have been on parallel trajectories, emerging as key players in the global economy. But recently, India, once the shining star of emerging markets, has been struggling to keep up with its neighbor. As India faces slowing growth, China, despite its own challenges, is managing to sustain its economic momentum. The question is, why is India's economy slowing down while China's continues to grow? Let's first take a look at the current state of India's economy. For the past few years, India has seen its economic growth steadily decline. In 2023, India's GDP growth rate was forecasted to be around 6%, down from 7.4% the year before, and even lower than the country's average of around 8% just a few years ago. This slowdown has led to growing concerns among policymakers, businesses, and consumers. One of the key drivers of this deceleration is the weakening of India's manufacturing sector, which has failed to gain the traction expected after the pandemic. Industrial output, which accounts for a significant portion of India's GDP, has been sluggish, struggling under rising input costs and a lack of substantial foreign investment. Another contributing factor is India's persistent inflation. The cost of living has surged in many sectors, particularly in food and fuel, putting immense pressure on the average Indian consumer. In turn, this has dampened domestic consumption, which is crucial for India's economic recovery and long-term growth. With inflation eating into household budgets, consumers have become more cautious about spending, resulting in lower demand for goods and services. Along with this, India's unemployment rate remains high, especially among young people, who are finding it increasingly difficult to secure jobs, further limiting overall economic activity. On top of that, India faces other long-standing structural issues, like inadequate infrastructure, slow bureaucratic processes, and an over-reliance on the agricultural sector, which has not been able to modernize at the pace needed to support a growing population and an increasingly urbanized society. For India to regain its momentum, experts argue that the country needs to prioritize massive infrastructure upgrades, improved labor policies, and investment in manufacturing to catch up with global standards. Now let's turn our attention to China. In contrast to India's struggles, China has been able to weather the storm better, despite facing its own economic hurdles. Despite concerns about its slowing population growth and a real estate crisis that has rocked many of its largest cities, China has managed to maintain its position as a global economic powerhouse. In fact, China's economy grew by 5% in 2024, meeting government targets, with strong export demand and a steady recovery in industrial output leading the charge. While this may seem modest compared to China's rapid growth in past decades, it still represents a significant achievement in the context of global economic turbulence. Much of China's continued growth can be attributed to its robust manufacturing sector, which remains a dominant force. Even with global supply chain disruptions, China has maintained its position as the world's factory, meeting both domestic and international demand for goods. The country's vast industrial base and its ability to produce at scale give China a competitive edge, especially as global consumers continue to demand affordable products. Furthermore, China's high-tech industries, such as electric vehicles and renewable energy, have helped diversify its economy and make it less reliant on traditional industries like steel and textiles. Additionally, China's ability to execute large-scale infrastructure projects quickly has helped propel its growth. The Chinese government has long employed a model of centralized planning, enabling it to invest heavily in infrastructure, such as high-speed rail, 5G networks, and renewable energy projects. These investments not only boost domestic productivity, but also help to position China as a global leader in technology and manufacturing. China's success in navigating its economic challenges can also be attributed to the government's aggressive stimulus measures. While India's policy responses have been somewhat reactive, China has been proactive in deploying financial tools to boost its economy, including targeted monetary easing, government spending on infrastructure, and efforts to revive its property market. Despite these efforts, China's growth isn't without its concerns. Some analysts argue that China's official growth figures may be overstated as the government often reports optimistic results that don't always reflect underlying challenges, such as rising debt levels and a possible property bubble. Still, China's strong political leadership and economic planning appear to have kept the country on a solid growth trajectory. The key difference between the two countries lies in their approach to economic management. While India has a more fragmented decision-making process due to its democratic system, which can lead to slower policy implementation, China's centralized governance allows for faster and more decisive action. This has enabled China to recover more quickly from global economic shocks, while India continues to struggle with its own set of problems. As we look ahead, the global economic landscape will continue to evolve, and both India and China will face new challenges. India's ability to overcome its growth hurdles will depend on how quickly it can reform its economic structures and address inflation, unemployment, and manufacturing stagnation. On the other hand, while China seems to have found ways to sustain growth, its future prospects will depend heavily on how it navigates its demographic challenges, global trade relations, and growing inequality. But the question remains, can India ever catch up to China? While India's potential is vast, it faces significant hurdles that China has largely overcome. With the right reforms and strategic investments, India could still tap into its enormous growth potential. However, it will need to move swiftly to address its challenges and foster an environment that can sustain long-term growth. The race between India and China is far from over, but for now, China's economic dominance seems poised to continue. For more updates on global economic trends, don't forget to subscribe, like, and comment your thoughts below.